So today we've got some bad news, but we've got some good news. So we're going to go through what has happened recently, and we'll start with the bad news because I'm sure you're pretty much aware of this right now. It was one story that we've been building up to all week, and I'm sure you hear it mentioned in a few places, and that's the inflation data. That was the bad news. So if we look at the stock market today, it's been a yo-yo. It's been an absolute yo-yo because in pre-market we had people that were gambling, thinking, okay, this inflation data is going to be okay. We were up a couple of percent, maybe 1-2%, and then the inflation data came out, and the reversal in pre-market was insane. It went from looking pretty positive to boom, down big time. I think we were even down 2% in pre-market, and a lot of the indexes, look at the S&P, look at the Nasdaq, they were down, and it was like, okay. It's going to be another red day. And the crazy thing is that we've seen a big massive reversal today. And you can see here on the S&P, we've had nearly a 4% swing in the S&P 500 today. And we're now currently up nearly 2% on the S&P 500. The Nasdaq, same again, was up, massive reversal. And then we've had nearly a 5% swing on the Nasdaq as well. And that's up as well. Massive reversal, and currently today the indexes are up. I've got to say, no idea how they're up, and this proves that you just don't know where the market's going to go in the short term. And if anything, I would say today this is a day where the market deserves to be down, and for some reason it's up. And you look at the inflation data unfortunately was quite negative. I was last time a believer of, okay, the inflation data was okay, not as good as what we expected, but today was another one of those inflation datas where it probably was a pretty bad one, if anything. Now the positive thing is that we saw inflation once again in peak, and it is still moving down in a positive direction. It's definitely not slowing rapidly, but we are still moving down in the right direction. But yeah, it was supposed to be at 8, and we were at 8.2. So the consensus was 8.1, and we were actually 8.2. But the negative thing is when you look at the core inflation, it takes out things like energy and food, and it was to see the uptrend in that really start ticking upwards. So that's been doing okay recently, as you can see, but in the last 2 months we've seen it go from 5.9 to 6.3 to 6.6. So we've seen quite a bit of an acceleration in this area here at the moment, which is not great to see. So we need to see that start altering itself out a little bit. So overall, once again, a bit of a mixed bag, but I would say compared to last month, this was a little bit more negative than last time. And yeah, you could see why the market swung massively to the negative on the open when this data came out. Now, like I said, the crazy thing is that we've moved back in the positive direction. No idea why. The stock market is crazy like this, and my thought was, unless we see anything with a 7 point something, we are going to go down. And especially that we've got an 8.2, I thought we are definitely going to go down here, which then did happen in pre-market, but for some reason buyers have come in. I mean, we might have just been in that situation where we've now got this totally priced in, and just that it's going down slightly, people are happy with it. I don't know, it's absolutely bonkers. But over the long term, it's probably a negative thing, because if it is not coming down as quick as what we are hoping for, then that kind of hope that the Fed do start to cool down going into next year. If it is not cooling down rapidly, then we are probably going to see hikes still coming, which obviously isn't positive as investors. So long term, not great there, and that's the bad news. Now, what's the good news? In mode. You guys know I own this stock. I know a few guys own this stock. Up 12% today. However, when you zoom out on the long-term picture, boom, the stock is still down. When you don't take that little jump up there, 70% at the moment. And what happened with InMode is it continued to deliver financially. They came out with preliminary earnings. Preliminary earnings were unbelievable again at 10 out of 10. They said that they expect third quarter revenue to be in a range of 120 million, 0.5 million to 120.9 million, well above the 105 billion expected by Wall Street. So they're going to come in around 120 billion compared to 105 million. Sorry, I said billion there. Compared to the 105 million. That's an absolute insane beat. Absolutely insane beat. Smashed it. and this is in this sort of period of time. And also the full year, it's expected, its company forecast to be 445 million to 450 million, and this was on the consensus of 424 million, so another smash there. And this is in a period of time where they've done this multiple times this year as well, so a fantastic beat on the revenue. Now I don't know if Seeking Alpha are going secret short sellers on here. Now they did mention the EPS, but they didn't mention once again how impressive this was. So they're expecting 0.64 to 0.65, and this was actually compared to what they're expecting of 0.53. So this is an insane beat on the EPS as well, and this was on a year ago EPS of 0.55. They were supposed to go down a little bit on EPS because they're actually starting to pay tax again this year, but even on the EPS that's going up massively as well. So they didn't even get the credit on there, so they're actually expecting now good amounts of revenue hike up and a really good EPS beat as well. This is insane numbers from InMode once again. And it's multiple times they've done it this year, which is fantastic. When you look at the story for InMode, when you look at the financials of this, you'll just see here that there's very much what the business is doing is just moving up and up and up in that right direction. It's just moving up and up and up in the right direction. Financially, it's just absolutely smashed it, and it's just ticking upwards absolutely lovely at the moment. And it's still doing this multiple times this year. It's over delivering, it's beating expectations, and if you were to overlap the financials at the moment with InMode, you know, these InMode's financials that have been on absolute fire, and then you were to overlap that with like the share price, it doesn't make sense. Like the share price has lost 70% of its value this year from its highs. The stock's down 70%, and you look at that and you go, okay, the valuation of this is that it's lost 70%, and then you look at the financials, and the financials are only getting stronger and stronger, and it's just a massive disconnect. And this is what's happening at the moment. You know, I was talking about some of the bad news here with some of the inflation data, but the good news is still seeing some businesses absolutely financial destroying it, and this is it. And it's frustrating. It's frustrating to see your share price drop so much, and then the financial performance is just getting stronger and stronger and stronger. And it's annoying to see this big sell-off here, and you're like, it just doesn't make sense. It doesn't make sense, unfortunately. This is the frustrating thing with being in this stock market crash that we're in. And this is the frustrating thing of being in the worst stock market for 40 years. You know, it's a badge of honor when you get to go through this and you get to use it on your career. Of like, you know, I made it through that worst stock market in 40 years. I was an investor that, you know, made it through that other side. And unfortunately, it's annoying. It's annoying to see stocks go down this much when their financial performance is just absolutely destroying it. However, the main thing is to keep doing this, is to keep staring at those financial performances. It's to keep staring at those businesses that are delivering their financial stories better than what were expected. They're growing faster. If for some of them, the profit are even bigger than what's expected, and just staring at the financials. That's the key thing to be doing right now. We're staring at the financials. Ignore the share prices. Ignore the share prices that don't make sense. The valuations that don't make sense. A business that's, you know, growing its revenue at 20+%, 25% revenue growth. Profit, even though it's paying tax for the first time this year, its profits growing insane, absolutely insane rates. It's all going to the balance sheet, and it's got an amazing cash pile, and it's lost 7% for something. It doesn't make sense. It's frustrating, but that's the key thing, is not to get sucked into the fear and stare at those financials, and it will be rewarded someday. So yeah, we've got some mix of stuff here today. We've got some bad news, I would say, but also good news to see that still there's some businesses out there absolutely financial delivering. And even though the share price, yeah, it's having a good day at the moment, but overall it's not been a great year for it, it's key to stay at those financials, because at some point that share price will go back to where it should be, and it will be rewarded if it keeps financially performing. And that's the key thing, is look at them financials, and today is a taste of what it should be, and it should be more than that. You know, we're talking about a stock here that should be over $60 right now, and it should be higher. And you imagine if we were in a bull market, what that share price would have been up today. Well, the good days will come back, and the correct valuations will come back, but for now the key thing is to make sure those companies are still smashing it, and there was one company today that smashed it. So yeah, I hope you enjoyed the video anyway, guys, and yeah, I'll catch you in a bit.